We have to wait to see. Very clear, tariffs push up inflation. Very clear, tariffs are a drag on growth for the U.S., not just for the countries that the tariffs are put on. The key question, though, in terms of trying to write down a forecast with specific numbers is how do they get implemented? Do they happen all at once, in which case, absolutely, we think there'd be a big negative shock to growth? Or do they get phased in over time, the way a lot of Trump surrogates on the campaign have been suggesting? What we've written down in our baseline forecast is that they do get phased in over all of 2025. And so as a result, you get some inflation in 2025, higher than it would have been otherwise. We're going to give the Fed a bit of a question about what to do with policy. But then into 2026, we think growth starts to come down a great deal in the U.S. because of those tariffs and some of the other policies. So it's tricky. This is a year of forecasts where everything is dependent on policy and how that policy gets implemented.
Does the Fed therefore pause in December? And do they need a clearer read then on what is going on in the fiscal end of town and ultimately how that affects the inflation profile?
So I don't think they pause in December. We heard Chair Powell at the last press conference very clear. When they're thinking about policy, they need to see the policy in place. They need to see the effects of that policy in the data they care about. The data they will have at the December meeting are data, especially on inflation, that were determined in the past several months. So already established, not influenced by the outcome of the election. So we actually think the next inflation print will be soft, convincing that the disinflation process is still underway, and so we think the Fed takes another step down with policy in December.
So the Fed remain data dependent. We get the next payrolls number. This will be November's reference number for on December the 6th in about 2 weeks' time. Is that going to be a narrative of economic resiliency, or are we going to see evidence of material deterioration in the labour market?
I think more the first, more the resilience. So we at Morgan Stanley, we are charter members of Team Soft Landing. We have been constructive on the U.S. economy over this entire cycle, and we continue to be so. We had, obviously, the last payrolls report was disrupted by hurricanes and strikes and that sort of thing. We got overnight some of the data at the state level that confirmed that view of the world. We think we get some bounce back just from those technical disruptions. I think the economy so far is actually quite healthy, slowing down a bit, but by no means collapsing.